And hello traders, and welcome to another video. So in this video we are going to talk about order blocks. Okay, so I'm going to explain everything about them. I'm going to show you guys how we use them, and yeah, I'm gonna show you the difference between really high probability order block and low probability ones. So guys, before we continue, you need to know that we in hybrid are using order blocks a little bit differently. So we do not trade them exactly the same as typical smart money traders. So we have our own method of using valid order blocks. So again, guys, in this video I'm gonna talk about them, but do not worry, again everything will be clear for you as we go through the videos. So I'm going to explain everything in details, what is valid order block for us, how we use them, when do we use them, etc, etc. Okay, so yeah, I think that everybody knows pretty much what an order block is. For the people who do not know, it's basically the candle before momentum. Okay, so basically the last candle before this momentum happened. So basically, supply and demand zones. From this, order block price pushed higher, made this massive momentum, and usually when price comes back, usually when price comes back to fill this order block, as we had a reaction from it, price pushed higher to the upside, we can expect when price pulls back to this order block again to have this same momentum in the same direction. So basically, it is the candle before momentum, but we mark them a little bit differently. Okay, so again, have patience, guys, everything is going to be explained. So how do we mark them and how do we use them, guys? If this candle is the last candle before this momentum, we're gonna mark it with this candle. So this candle is smaller, this candle is bigger, so we are marking the smaller candle, and we're using the candle highs wick and this candle's low. Okay, so this candle high and this candle low in this scenario right here. If we have a next scenario, we have a smaller candle and then an impulse to the upside, you see it's a little bit different. This candle is not the big one. So in that case, this would be our block, and the same candle high, wick high, and the same candle low would be marked as another block. Okay, so basically when you trade order blocks, you want to see a classic continuation like this example here, price making this impulse, retracing them, making this impulse again, and this is going to show you that we have impulsive break of structure here, and we have our valid order block here, and then we want to see momentum coming back to this zone, and we want to see continuation push up. So there are a few things when we are looking at order blocks, that indicates to us whether the order block is high probability or low probability. So for example, first thing that we want to see is impulsive break of structure. Okay, so there are a lot of people who are looking at I don't know, let's say something like this, standing price action, continuation push up, and then price makes something like this and doesn't break this low and does something like this. There are a lot of traders who are going to look at this supply zone here, this order block here, and they're going to still trade it. But for me, this is not valid. For us, this is not valid. Okay, why? Because first thing what we want to see when we want to trade high probability order blocks is that we had an impulsive break of structure, or in this case, change of character. So we want to see that price with that order block has momentum and it breaks the structure impulsively. So this is the first thing that you are going to look at when you trade high probability supply and demand zones. Okay, so We want to see that that supply zone has broken the previous structure, the last low, impulsively. This is what we consider a valid order block. So if we didn't had an impulsive break of structure with this move, this is not considered. And if we had a continuation, I would rather trade based on this zone that broke this structure impulsively than of this zone. Okay, so this is your small tip, you know, when you're watching, when you're looking at supply and demand zones. If the zone has not hasn't had enough momentum and didn't broke the high or low impulsively, usually that supply or demand is going to be, you know, considered low probability and it's going to be taken out. So that's the first thing that you want to see, that it's impulsive break of structure. Next thing that you want to see is that we have momentum in this impulse here. So we want to see clean and clear momentum. We want to see that we didn't have any retraces. That would be really, really good. You know, just price pushing up, you know, in the one direction without any retraces, without any weakness. That would be, you know, great thing to see. The second thing, third thing, this is what we want to see, is imbalance left behind. This would be really, really good. This is like something that it doesn't have to be there, but it is more high probability if we see it. So if we have imbalance left behind, you know, our block is going to be more high probability. Also, if you have, you know, impulse to downside and then we start to build liquidity here, you know, this is called inducement, and again this will also indicate that our block is more high probability if we can take that liquidity before, you know, we enter. Or the fourth thing is that we want to see a corrective pullback. Okay, so if we see, you know, price coming back to this order block correctively in this descending price action, this will first indicate to us that we do not have momentum to continue to the downside. Price is showing us weakness to the downside. It will also indicate that price is building this liquidity on the way down. So when we enter on our order block, this will be high probability trade because price is again showing us momentum to the upside, slowing down in the momentum to the downside, and then a continuation push up to fill this liquidity. So this is again something that we can look for, and this can differentiate really if our block is high probability or not. So for example, if you have impulsive break of structure, you have nice momentum, you have, you know, imbalance left behind, but you do not have a corrective pullback, you have price coming back, you know, aggressively to your block in this, you know, volatility, you know, in V shape, that is considered again aggressive. Okay, because again you are going against momentum, and you know it can be risky. But again, guys, you can combine those things, all of these things, and build a little bit of confidence. So maybe you don't have you know, that impulsive break of structure. Maybe you, let's say you have only one candle break of structure, you know, 2 or 3 candle break of structure is always better. You know, it's considered that momentum is present, and one candle breakout, you know, and one candle momentum is not considered that great. But again, if you have, for example, corrective pullback, and in that, you know, momentum you had imbalance left behind, this would still be considered as a high probability order block. You know, even though you had only one candle and you didn't have, you know, enough strong breakout, you had a corrective pullback, building liquidity on the way, you had an imbalance left behind. So you're combining those things, you know. So for example, if you have impulsive break of structure, you have nice momentum, really great momentum, and then you have aggressive retest, it can be less probability, but again you have other confluences, you know, that are going to tell you, you know, that our block is high probability. It also depends on the pair that you're trading. So for example, continuations on Euro USD a little bit more aggressively, when you have, you know, impulsive break of structure, you have nice momentum, imbalance left behind, and then you have aggressive pullback and price is trending. Those are high probability for me to trade because I know the pair. You know, Euro USD loves aggressive continuation. It's perfectly fine to take them. But for example, on some other pairs like AUD USD, I wouldn't do that. So again, guys, have patience. As you're watching the videos, you're gonna get to know the strategy, you know, in detail. Again, after every video, you can look at the charts, you know, test things a little bit. Again, when you finish with all the content, when you start backtesting, doing all the things that we are doing, everything is gonna be more clean and clear to you. So no worries, okay? So those are the things, guys, basically that we want to see in order to trade high probability order blocks. So first thing, again, write it down, remember, first thing, we want to see impulsive break of the high of the low, okay, either high or low. So this will indicate to us that our supply and demand zone is high probability. Second thing is that we want to see a nice momentum with no retraces in it, okay. Third thing, extra confluence imbalance would be great. Fourth thing, extra confluence liquidity would be great. And then fifth thing, we want to see corrective pullback. We do not want to see aggressive approach coming back to our block, forming volatility. So this is basically for continuation, guys, how we're going to trade continuations, impulse, correction, impulse. This is how you mark your blocks. And we can move on to this example. And this is basically an example for reversal trades. Now price will indicate to you that price doesn't have momentum to continue to the upside. You see that we have these breakout structures, but as soon as we break the structure, price is retracing. As soon as we break the structure, price is retracing. And then all of a sudden price breaks the low. Okay, so again, we want to see that we have impulsive breakout structure slash change of character. I want to see imbalance left behind. I want to see nice momentum. Again, 2 or 3 candles is always better than a single big candle. So I would rather want to see 2 or 3 consecutive, candles like here, and this will indicate momentum to me, that momentum is present. I'd rather see this than this. This can be from news or, something happened in the markets, etc. This is not that safe when you have only one candle breakout, one candle momentum, and then you're marking your block here. This would be considered better, okay? So again, how do you mark this is, the last candle before the momentum, you're also marking this high here. So not only this, so you're marking only this. You're gonna see with inside bar candle, we do things a little bit differently, okay? So for example, if this was an inside bar candle, we would not mark our low here, we would mark only the inside bar. But again, guys, patience, I'm going to explain everything in future videos, so no worries at all. So yeah, the same example here, guys, but again, we're having this here, this order block here. So in this case, again, the candle is smaller, so our block is here. So a little bit differently, you have 2 candles here, and you have only 1 candle here. So in this case, the order block is here, this candle on the left, and we are marking the wicks. And in this example here, when we have a candle and then momentum, then we are marking this candle here. Okay, so this is basically the rules, how we are looking at our blocks and how our blocks are basically marked and how are functioning. What is high probability order block, what is low probability order block. I'm going to show you the charts as well. I'm going to compare a few trades. We're going to break down a few trades again. Again, guys, have patience. I am going to explain everything in future videos, so no worries. So you are going to know how to mark order block correctly, because again, we are doing things a little bit differently. Okay, so let's see, guys. We have here your USD, and we can look at this and we can say that this is example of high probability order block. First off, price was showing us that it is in this descending structure, so putting in new lower lows in the market, guys. And again, when you're trading with the structure, when you're trading with the trend, your trades are going to be more high probability. So this is the first confluence that we were seeing right here. Then the second thing that is really nice about this trade is that we had this impulse correction impulse. Beautiful example of a continuation trade, guys. So basically you're gonna see that you have impulse to downside, you have retrace, you have impulse, and what happens is that you want to get involved right here in this order block right here, okay, guys, and you want to take your trades here to really for the creation of new lower low, you know, because again, structure is descending, structure is bearish, and we are trading continuations. So beautiful example of a continuation trade, guys. When you are looking at continuation trades, this is the best, I think, that you can get. So impulse, correction, impulse, again another correction, building liquidity. So first thing, let's start for the first thing. So what we told you, first we want to see impulsive break of structure. Okay, how do we break this? We break it pretty impulsively. Okay, so we have our impulsive break of structure. The second thing that we want to see is momentum. Okay, so we had only 2 candles momentum. So like I told you, I would rather see 3 or 5, even 3, 4, 5, because this is a big impulse really. So I would rather see more candles than only 2 candles, because this is just 1 candle. It can be from news, etc, etc. But again, momentum was strong. We didn't have any retraces. And third thing what we want to see is imbalance left behind. As you guys can see, we have this imbalance left behind, so this means that our order block is going to be more higher probability. And the third thing, fourth thing is we want to see liquidity building on the way up. So we have seen the tons of liquidity before our block, and also we have saw that we have this trend line liquidity to fill also for direction and before entry. So this is again going to indicate to you that our block is more high probability. And then the final thing, what we want to see is we want to see corrective pullback. As you guys can see, we don't have aggressive pullback here. You know, prices approaching slowly on this order block, you know, building liquidity on the way up, retracing a lot of times, you know, it doesn't have momentum to continue to the upside. This is our indication of weakness to the upside. So in combination with our order blocks and everything that we see, this will indicate to us that this order block is high probability order block. Okay, so you see, you're gonna combine all those things, but those are really the most important factors that will indicate that your order block is high probability or low probability. Okay, so again, remember this: impulsive break of structure, nice clean momentum, imbalance and liquidity left behind would be great, and corrective pullback approaching and coming to your zone. Okay, so I'm gonna show you another example, guys, of this beautiful trade on Euro USD. So basically the same thing, guys. You know, price is in a uptrend. You know, price is clearly showing us it wants to trend. Again, I told you, when you're trading with the trend, you are going to have more success. You know, catching reversals can be a little bit tricky sometimes, but trading with a trend is, you know, really easier. So price was indicating to us, even here we had this descending price action, we broke, we react to this, we broke again, we react to this, we broke again, started to retrace, broke again pretty impulsively, price came back, reacted from this order block, continued to push to the upside. We can clearly see that we're breaking the structures, breaking the structure. Okay, so right now, how do we break this previous high? First thing, how do we break previous high? Even this major high, we break it impulsively. Okay. Second thing is momentum present in this impulse. We saw that we have 1, 2, 3, 4, 5, 6 candle push to the upside. Beautiful. Okay. And the third thing, do we have imbalance? Not quite, but we have a little bit of imbalance here, you know, but never mind. We have 5, 6 consecutive, you know, candles breaking the high, so this is our indication that momentum is present. Okay, then do we have liquidity? Oh yeah, we have liquidity here, building here, we have liquidity building here. And do we have a corrective pullback? Of course, we also have a corrective pullback. Price wasn't coming back to with volatility with the same momentum to our block. It was coming correctively to this order block, and you can see this massive reaction from this order block. It was really nice trade. So what would be considered low probability order block? This, let's say this, for example. So what do we have here? Let me delete all of this. So what do we have here? You have, you know, you can look at this, you know, maybe, and you can say that you have this impulse that have left imbalance behind, and then you have this ascending price action, breaking the highs, retracing, breaking the highs, retracing, breaking the highs, retracing. Okay. And you were too focused on, you know, filling this imbalance or this trend line liquidity, wherever. maybe you found a zone here or something, you know, reaction, you know, quite easily can get trapped. And what is going to happen that you have this high right here, you have this right here, and you saw that based on this most recent high, this would be your most recent low. So price may change of character. And you saw this, and you saw this momentum to the downside, and you wanted to trade based of this order block. But what happened? Price came back aggressively. So where is our confidence? First thing, do we have impulsive breakout structure? Yes and no. Okay, this low is also quite important. So we didn't quite broke it, we even reacted to it. Okay, and then a lot of traders would look at this as liquidity and they would take the trade, you know. But again, we didn't have enough impulsive breakout structure. First thing. Second thing, do we have impulse here? Based on what we are seeing here, momentum and this momentum here, is this really a momentum? You know, price is pushing up, breaking the structure to the upside, momentum is present, we have multiple reactions. Is this really considered as a valid breakout structure and a valid momentum here? Not quite. Do we have a liquidity and imbalance? We do not have any liquidity and imbalance, only here, but this is also reaction. Where is imbalance? A little bit, but again, not that big. And then, do we have a corrective pullback? No, we have volatility. So we have this aggressive coming back. And again, guys, going against momentum is never a good idea, you know. So as you guys can see, boom, price just melted up, pushed to the upside, and then we had a buy opportunity. So basically, guys, those are the things that are indicating your order blocks, your supply and demand zones. You know, first thing, again, impulsive breakout structure. Second thing, momentum in this impulse, really important. Corrective pullback and total confluences like liquidity and imbalance for, you know, extra confluence. Okay, so that's pretty much it. I hope that everything was clear to you. Again, we are going to do a lot more videos about this topic, you know, so this is only a quick introduction. So yeah, that's it for this one, guys. Hope you enjoyed it, hope you liked it, and yeah, see you in the next one.